Aloha folks, welcome to another video. My name is Mark, Mr. Dividend Investor. In this video, I want to talk about 3 great dividend companies that if you are starting your dividend portfolio, you definitely want to add these companies. These are 3 companies that are called Dividend Kings. There are more Dividend Kings out there, but for this episode, this video, I want to talk about these 3 companies. As always, please remember that all of this is not financial advice. I'm not a financial advisor. This is just me sharing. If you are new to the channel, just wanted to say welcome. If you are new to investing and you want to learn about which companies, dividend companies to invest on, or whether you're looking for growth stocks or even penny stocks, I want you to hit that notification bell so you don't miss out on content and videos that I put out, as well as hit that subscribe button. With that said, let's take a look at these companies. First on the list is American States Water Company. The ticker symbol is AWR. Basically, this is a company that engages in the purchase, production, distribution, and sale of water. Did a video about this a while back. Definitely one company that I invest on. Great company to start your dividend portfolio, in my opinion. Now, if you look at tip ranks, their price target is in the 87 with 1% upside. If you look at the price target is in 87, average is 87, and the low is 87 with a consensus rating of moderate buy, 1 hold, and 0 sell. Now, if we look up to CNN Business, as you can see, based on their forecast, is in the high of 94, the medium 87, and the low of 70, with analysis recommendations of 3 buys, 1 hold, and 1 sell. Now, looking at Simply Safe Dividend, based on their Safety Dividend, they have a 98, which is very safe. Again, the market cap is 3.18 billion. The dividend yield is 1.57. Looking at the key metrics, one of the things is the payout ratio is 53%. Now, looking down to the dividend growth, you can see the last 5 years it's up 8% per year, which is they rate it as fast. Last 20 years it's up 6% per year, which is average. Now, this is where I love the fact that, look at this, dividend growth streak of 66 years of consecutive increases, and uninterrupted dividend streak of 66 years without a reduction. So impressive numbers for 66 years, not a reduction, and they've been increasing it. Now, your payout schedule will be quarterly, which will be March, June, September, and December. The annual payout would be $1.34. Now, if we look at Yahoo Finance, you can see the top institutional holdings is BlackRock. On March 30, they bought about 6 million shares, followed by Vanguard, about 4 million, State Street Corporation, about 2 million. So I usually look for like BlackRock and Vanguard. So those are 2 big time top institutional holdings, right? Now, if we look at Webull, based on their analysis, they have 5 of them, and they recommend it as a buy with a strong buy of 20%, a buy of 40%, a hold of 20%, underperform 12%. Looking at the price target, you can see the high of 94, the average of 80, and the low of 60. Now, if we look down to Google, you can see, again, comparing some of these things based on the 5 years, it's up 94%. The year is up 5%. Year to date, it's up 9%. 6 months, it's up 5%. 1 month, it's up 4%. Now, if you look at the PE ratio, it's about 34. So, again, definitely, if you're looking for a dividend company that you know that it is solid, people are going to use it from time to time again, American State Water is probably something you would consider. All right, next on the list we have Hormel. The ticker symbol is HRL. This one engages in the production of meat and food products. So again, you probably have this in your house. You know, planters. All these things are some of the products that you probably definitely use. Now, if we look at tip ranks, at the time of this video, it's at 47 with a price target of 47. The average high is on the 50, the average 47, the lowest 44 with the analysis rating of moderate buy. That's 1 buy and 2 holds. Now looking at CNN Business, you can see their high is up in the 50, the median is 46, and the low is 42, with an analysis rating of 10 holds, 2 underperform, and 1 sell. Now CNN Simply Safe Dividend, based on the dividend safety score, they rate it as 99, which is very safe. The dividend yield is 2.80. The market cap is 25 billion. Now looking down to the key metrics, payout ratio is about 59%. Looking at the dividend growth, the last 5 years, 13%, which is very fast. Last 20 years is up 13%, which is again very fast. So but this is where I think I really just love this company. 54 years of consecutive increases in terms of dividends and uninterrupted dividend streaks of 54 years without a reduction. Now your payout schedule will be on February, May, August, and November with the annual payout of 98 cents per share. Now if we look at Yahoo Finance, the top institutional holdings are Vanguard, BlackRock, and State Street Capital. You can see on March 30th, they bought about 33 million. BlackRock bought about 28 million. State Street Corporations bought about 26 million. And then you got all these other parts. If you look at it, each one of them bought at least 3 million shares on March 30th. So solid company in my opinion. Now if we look at Webull, based on their 13 analysis, they're rated do as a whole with 80%, 84% a hold, underperform, which is 15%. Now the price target is again pretty similar, $50 in the high, 47 in the average, and 44 in the low. Now, if we look down to this, if you ever get a chance, go to CNBC. There's an article on that. Spam is in the spotlight. We love spam. If you're from Hawaii, you're definitely gonna see spam is everywhere. I love spam, so check this video out. Shout out to spam. Love it. All right. Now, taking a look at Google, you can see the 5 years is up 27%. The year is up negative 5%. Year to date, it's pretty flat, about 1%. And then 6 months is up 3%. And then the month is -1. So when I look at stocks that I want to invest on, I pretty much look at the 5-year chart to see how is the 5 years going. So that's something, if you're new to investing, definitely take a look at it. PE ratio is about 29. Last on the list is Johnson & Johnson. Ticker symbol is J&J. One of my favorite companies to invest on. A very solid company in my opinion. This is, if you don't know what Johnson & Johnson is, it's a research, development, and manufacture, sales, or production in the healthcare field. They also do vaccines with the pandemic. Now looking at tip ranks, at the time of this video is 169 with a price target of 193 with a 14% upside. Now if we look at the price target is in 200, average is 193 and the low is 187. With the rating of strong buy based on 6 ratings. So there's 6 buy, 0 holds. Now compare that to CNN Business. You can see their price target is in the 203, the median 188, and the low of 160 with the analysis recommendations of 12 buys, 3 outperforms, 4 holds, 1 underperform. Now looking at Yahoo Finance, you can see on March 30th, Vanguard bought about 229 million and BlackRock bought about 189 million, as you can see, and State Street Corporations 140 million. So you can see the amount of stock shares they bought at that point. So solid company in my opinion. Now, if you look at Webull, based on 29, they rated as a buy, strong buy 28, buy of 47, a hold of 23 with the price target of the high of 203, the average of 187, and the low of 160. So it's getting closer to the average from this one. Now, if we look at Simply Safe Dividend, based on their dividend safety score, they rated as a 99 with a dividend yield of 2.50. Market cap is 444 billion. Looking down to the key metrics, you can see payout ratio is 49%. Now the dividend growth, the last 5 years up 6%. Last 20 years is up 10%, which is fast. Now look at this one. Dividend growth streak of 58 years of consecutive increases, and uninterrupted dividend streak of 58 years without a reduction. Payout schedule, you will be paid quarterly, which is March, June, September, and December, with the annual payout of $4.24. Now these are the companies, dividend kings. Now if these when you get into the dividend king, this is companies that boost its dividend for at least 50 years in a row. So if you like those companies, you definitely want to take a look more, do your own due diligence, do your own research. Thank you so much for watching, guys. Hope you liked the video. If you do, give it a thumbs up. If you're not, and subscribe if you haven't done so. As always, please remember, be safe out there, stay cool, keep investing, guys, and I'll catch you guys on the next video. All right, take care. Aloha.